Another phenomenal day for Tesla, up 4.9%. And now Tesla has actually broken out 12% within 9 days. And I did come out of that hole that I had. You guys remember August was an absolute shit show. We got murdered the first 2 days of the month. We had about a $500,000 drawdown, which is obviously the biggest drawdown of my life, but we've stuck to the plan, we've course corrected, and we're digging our way out. And I actually took the profits on my December $220 calls, and I opened up February 2025, so that's this February, $230 calls is the strike. Now, I want to go over in this video why I closed this position out specifically and why I opened this February position. Because if I'm still bullish on Tesla, a lot of people are wondering why I would even close the trade out in the first place. I posted on X earlier today a snippet from an internal note in our private Discord community. And at 9:53 a.m., I told the community I was closing the $220 calls that I had for a profit and that I would open the February calls. I said, this is 50% of my full position size, and I'm holding back capital to average down if needed. Here's why I'm making the move. Lower risk and time decay. By going with February instead of December, we will still get leverage, but reduce the amount of risk of time decay eating into our gains. We have free courses on options down below. I highly recommend you check them out. But what gives an option value is one of two things. The first is time value. So if today Tesla's trading at 220 and you get calls for 230 in a year, well, you have a whole year, the time, that's valuable because a lot can happen within a year. That's what gives it its value. The other is called intrinsic value. So for instance, if Tesla's trading at 230 and I own 220 calls, I can actually buy Tesla if I exercise that option for a discount than what it's currently trading at. That gives it value. But because I think there's still a chance that we could reject here one more time, which we're going to go over in this video, it doesn't look that way, I'll be honest. But because there is still a chance, I felt that the smart idea was to close out the calls that I had for December, since we're only a couple of months away now, and instead roll it until something further out in time. Now, the other reason is for better liquidity and volume. Liquidity just means volume, and volume just means people buying it and selling it. I said if Tesla hits $280 and $300 by the end of the year, which is what we expect, those deep in the money contracts might see less volume and more slippage. February contracts should be more popular, helping us avoid slippage and maintain liquidity. And what I mean by this is that I had $220 calls. So if we see this thing continue to run up to 260, 270, 280, people who are trading contracts every day, the ones who are actually creating volume, they're not going to want something that is that much in the money. That's, about 10, 20% out of the money. There's no reason for it. Instead, if as Tesla continues to move up, we continue to roll our positions out, which just means close them and then open closer ones to the strike, then we will have more popular contracts. The more popular the contract, the better for us. Because in trading, we have what's called slippage. We have a bid ask. And this means that, let's say this contract, somebody is selling it for 25 cents and there's nobody else looking to buy or sell. So that means that we could have a wide spread where we have somebody who's willing to spend 25 cents, but the cheapest person willing to sell it is 50 cents. And so if the bid ask are not close to each other and there's not a ton of volume, you might get stuck paying what's called slippage. Because if there's no one there to buy your contracts, it doesn't matter how much your contracts say that they're up. If no one's there to buy it and you can't sell it, then it's not worth what it says it's worth. This is why we want to trade with contracts that have a lot of volume. Now let's take a look at the actual position. You're going to notice that I said that I was only going in with 50%. So that means that I want in total $200,000 in these Tesla contracts. So right now I owned 30 of them. My commissions and fees was $19. The average price that I paid was $37.35. And you're going to see my execution today was at $9.50 If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description. Now, remember, that $100,000 is a lot of money. But if we go up into our filters and we search for just the symbol, you're going to see that this year so far on Tesla alone, because we've been trading very, very well on Tesla, that we actually are up $597,000 on just Tesla. So that means that even if I were to lose $100,000 on this trade, I'm only giving away 20% of my profits on Tesla. And so I'm really not risking that much relative to the fund. Now that we've gone over the trade, we've gone over the setup, I want to talk about the technicals a little bit and how things have changed for the better in the past couple of days. As you guys know, we talk a lot about market structure and whether price is making higher lows or higher highs. We talked about yesterday about how price was making higher lows, which is a very good sign. So if we were to take our trend line, we could connect all of those lows and you will notice that we have a compression. The same deal if we were to take all of our higher lows. All of our lower highs. When we get sideways compression like this, normally what will happen is price will squeeze inside of the head of this symmetrical triangle. Think of it like a pimple. You have one finger, which is your resistance, squeezing the pus out, the other one, which is your support, which is squeezing the pus out as well, and then eventually the pus has to go somewhere. In most cases, this is a continuation pattern. And now since the trend has switched to bullish, the chances of this continuing back to the upside are very, very high. Now, my target for this week was 220, and if that broke out, 232 to highs of $240. But as we're moving into this level, we do have something that we have to take into consideration. The first thing is this gap. So price gapped down after earnings. There's a saying in trading that all gaps need to be filled. And in most cases, price will come up to fill a gap, usually after we see these types of sell-offs. So I think the chance of this filling the gap is very, very high. Something else that we have to take into consideration, though, is this liquidity zone. So you're going to see that price rejected here 1, 2, 3 times, a 4th time, and potentially now, we'll see what happens, a 5th time. Now, something you have to remember is that the more times a liquidity level is tested, the higher the chance that it's going to break. So now that Tesla has pushed into this level for a 3rd time, yes, we could reject and test 212, 208, 204, but I think that as long as we get continued bullish accumulation, that we should break through and move our way to 240 to $246, which would fill the gap. If we look at accumulation, which just means is big money buying this? You can tell they are. You'll notice that we're getting higher lows that are turning into higher highs on the BX trender. The last time we saw this, price pushed up 15% in 13 days. The time before that, price pushed up 50% in 26 days. So there is a chance that we could get this move within the next couple of days. And we have the jobs report coming out tomorrow. So tomorrow we have non-farm payroll, which is supposed to come in at about 161,000, and we have unemployment, which is supposed to come in at 4.2%. So if we can come in better for those numbers, that could help to continue to push the market, which would also help Tesla. If we view the weekly chart, I want you to also notice that if tomorrow's weekly candle closes with higher lows, there is about an 80% chance that Tesla is going to rocket. Last time we got this was during all of this consolidation, and once it released was about 46% within 28 days. I still think that Tesla is going to hit 300 by the end of the year. And even if it doesn't happen in the next month or so, even if we reject off of 230 and 236 and we don't get the breakout until the robotaxi event, I still think that we're going to run. The reason we got this push today was that Tesla laid out the FSD plan. And the fact that I think that they said it was going to be in Europe by Q4. I don't remember the full details. I'll have to take a look at them. They said Cybertruck's getting FSD by the end of this month, which will be awesome for me. But I think that big money and Wall Street is buying back into the AI narrative for Tesla now that it pulled back so drastically. I hope this video helped, guys. I'll see you tomorrow. Thank you guys for watching the video. If you want to trade alongside of me each and every single day, get access to all of my real-time alerts, private live streams, as well as a trading community of over 800 other traders using the same exact strategy that you see here each and every single day. If you want to join the team, you can use the link in the description to join the private mentorship group. If you don't feel like you're quite ready for that, then take advantage of all of the free courses that we have on our website. Thank you guys for all the support, and I'll see you next time.